Hey, it's Saul with the Stock Market Trading Watch List for Wednesday, August 24th, 2011. Let's start off with the SPY, and I do the SPY video as always. It's posted on the blog, but you can see here it held the line in the sand. 1, 2, 3 tests of this 78.6% retracement. Got some expansion into the 10-day moving average here, up about 3%. The Dow up almost 3% as well. Okay, you can see it closed over the 10-day moving average. The big boys, the market leaders, the NASDAQ 100 up 4.13%. Nice move. So this could be a possible short-term double bottom. More on that in a second. And then the Russell up nearly 5%, also into the 10-day moving average. Now, for those of you who've been watching my videos for the last couple of weeks, you know the roadmap I had. Okay, after this move up and then after this bounce, I was watching for this bounce to peter out, hold support, and then get a bounce. Now, I would love to sit here and throw my hands up in the air and go, yeah, but unfortunately, as if you watch Tuesday's video, as you can see, I jumped back on the fence. I was actually off the fence for a little bit, and I admit it, I'm a fence sitter. I like to see a lot of evidence pointing in the direction that I want to lean to, okay? So I was off the fence. I was looking for a pullback, a hold, and then a bounce, and I got right back on the fence. So is this the low? I don't think it is, okay? It was good, some good signs on Tuesday with the Russell and the NASDAQ 100 leading. I feel that it could be a low. I feel that this could be a low in place, but not the low. And what I mean by a low, I mean a low, right? A low. Okay, I think that we have lower prices to be seen. That's my opinion, but that analysis goes out, to several weeks, maybe even several months. I don't know. Maybe it'll happen tomorrow. Maybe we'll just crap out from here. So, but I believe that we are in at least a bear phase, if not a bear market. I think we're probably in a bear market too, since we're below the 200-day moving average, and this was a pretty sharp break. But at the least, I think we're in a bear phase. I just love reading and listening to these people that come in and go, well, technically the percentage, and first it's 10%, then it's 15%, then it's 20%. And if we get below 20%, it's just, all right, look, we're below the 200-day moving average. We had a sharp break of, a flat, basically flat pattern here on some of these indexes. Right, we were going higher, and then we just went range bound here. So for now, it's a bear phase. All right, if we get over the 200-day moving average, sure, I'll change my mind here. But I think that this is going to form a more complex correction, and then I think we're going to continue lower. And like I said, I think we're going much lower, but it doesn't matter. I could change that opinion day to day. Okay, that's a longer-term opinion. On the short term, as I've been saying, I think we can get a bounce. I still think we can get a bounce. I'd be watching the 20 EMAs, and like I showed on the SPY, the gap fill. You got the Russell gap fill here. Probably, unless it gets there on Wednesday, the 20 EMA could be lining up with that gap fill. It's almost at the lap fill, which is the difference between the close and the open rather than the low and the open. So that's what I'm looking for. I'm looking for us to slosh around in here and form a corrective pattern, continue to form a corrective pattern, okay? So let's look at the stocks. Whoops. Help if I got the right symbol. Up 5.2%, double bottom possibly here. And like I said, not a longer term double bottom, just a short term double bottom. Okay, the banks with a reversal up 4%. I mean, we can go through them, but I mean, to me, the story remains the same. I want to see follow through from Tuesday's candle. I mean, I went over the plan on the SPY video, but I'm looking for an AM consolidation, potential fades of the move both ways, and then a consolidation that breaks, and see if we can continue. I mean, if we just give it right back up, that's a very sick market, and we might. You know, I'm not sitting here slamming my fist on the table saying we have to go higher from here. Okay, you know, that's what people said after this candle, and then you see what happened, right? So basically, the indexes are looking similar, if not exactly the same. See the HMO, a nice 5% pop here. Let's look at some drug stocks. We looked at them. We looked at them yesterday. Okay, so you can see a little higher lows, and they're trying to bounce, trying to continue to bounce. But you got the 20 EMAs coming in. All right, there's Pfizer, there's Lilly. Okay, 200 and the 20 here. What can we do from here? All right, let's look at some tech. Look at some really nice moves in tech. Apple, beautiful move. And I was thinking we were going to at least test these lows, but nope. Instead, we got to bounce. Who knows? Maybe, like I said, maybe it'll come back down there tomorrow. I don't know. Google, once again, below the 78.6 for 3 days. Now back above it. So this is one to definitely watch. If we do see weakness coming back, watch Google. Okay, Amazon. Big day, 8.6%, just a monster. Priceline, you know, and all these candles, these big candles. Okay, I'm not one of these guys that look at big expansion candles and expect us to just continue moving. Right? Look at this. This is the last time we had a big green candle. What was the next day? Boom. Right? I mean, these are just whipsaw days. I believe this was around earnings and stuff. But you know, a day like this, you know, a bear market rally. Okay, now over the 200 days. So I don't know if Priceline itself is bearish, but you know, the pause day, light volume, big range, light volume, pause day would not be out of the question. Netflix, okay, got to get back over its 200 day. Potash, okay, big day, 6.33%. You got the 200 day moving average though, up above to watch. See if it can get through that. Caterpillar. Somebody wanted me to look at Illinois Toolworks again also. 3.8% gain. Doesn't look like much. The volume came up, though, on Caterpillar. That's good. Here's Illinois Toolworks, almost up 4%. Okay, but volume, 2 up days in a row. Volume, not so nice. It's declining. Watch the 20 EMA as potential resistance. Somebody said FAS and FAS. I mean, I don't know if I have to look at both of them, but I will. Fast, maybe a small double bottom here, nice volume coming in here. Okay, so maybe fast could pop up here. We'll see. Do some of the big ones. Microsoft, if I could spell it. Come on, here we go. Okay, nice day for Microsoft. Intel, okay, you know, came down. I kind of let this one go, but this one, when I did the analysis, I believe last week on it, right, it was setting up. It looked like the market. It came down and actually took out the support line I had drawn. I don't know how accurate that support. I mean, it technically could come down there. Still took it out, remounted it here. So maybe Intel's going to get a bounce here. We'll see. Hewlett-Packard. Nothing. Electronic Arts. Okay, 20 EMA. Watch that. Could be doing an ABC up, though. Gold. All right, that's the story on gold. Nasty candle. So I'd love to say, well, you know, I told you, I wrote about the parabolic move. Yeah, well, I did, but there was no reversal candle here on GLD. Okay, so unless you were trading the futures, where there was a potential opportunity intra-session, but otherwise this was a gap down. We came up a little bit and then just sold it. So watch these moving averages here. You got the 10-day and the 20. SLV also gave it up a little bit. Watch the 10-day and the 20 here. Finally, OIH. Okay, nice 4.83% move. Let's take a quick look here. It came a little shy of this 116.94. So let's do the quick recap. Good day for the bulls. Okay, is the low in? I don't think so. I think a low could be in. and I want to see if we get follow through. I want to see if we run into resistance here from gaps and the 20 EMA across the major indexes, and I want to see if this continues to form a complex correction that eventually will lead to lower prices. All right, so trading plan for Wednesday is watching moves in either direction early on, and then looking for a consolidation that either breaks or we just form the pause day and maybe get a move on Thursday. Have a great trading day on Wednesday. Talk to everybody again on Thursday.